Hey guys, hope all is well. My name is Christian. I'm making this video, long story short, a lot of CPAs and just accountants or bookkeepers just don't know what to talk about during meetings. So in this video, I'm gonna cover basically the five main topics that not only accountants can use, but what business owners need to know and need to address each meeting. This is what you can talk about throughout the whole year. This covers basically your main core meeting of just going over your financials. Most of the time, people just send financials, say, here you go. It's more than that. You need to know the why behind your numbers, and you need to make sure that the numbers are correct. For us in our company, this meeting's used to set up all the other meetings. This meeting's used to set up all the other meetings, your forecast, your business development and sales pipeline meeting. This can be used to look at your short-term cash forecasting meeting, all other meetings. But we have to get this meeting right because we need to make sure the historicals are accurate. And then we need to understand, I need the business owner to understand the drivers of, why cash is this way, why your expenses is that way, etc. So let me go over the five topics. I'm actually going to start from five and work my way up to one here. So the first thing I like to, well, not first thing, but one of the things I like to talk about is the cash. And with the cash, I want to ask myself, is it going up or down compared to either last month or same month last year? So we're in July now. So I would have been comparing it against June, or I would have been comparing it to July of last year. And the reason why I'm comparing it, because I like to, business is like a sport to me. I want to compare how we did the previous game, which is last month, or the previous season, which is last year. This helps me understand where our company is going, or is it trending upwards? Is it underperforming or overperforming? Underperforming or overperforming. So with the cash, I want to I want to see, is it going up or down? Then I'm going to look at the drivers. I'm going to go into the drivers, but the drivers, anytime you see these yellow drivers, is basically me asking why. Why did it go up or down? And what can we do about it, basically? But the main reason is, why is it going up and down? Because I want to understand the why. Did we just spend a lot because we just hired on somebody and they took a huge onboarding cost? Right? We're going to see that in the G&L. So I always want to know the driver, because the drivers help the business owners not repeat the same mistake. They need to know the why. Like, hey, you're overspending in this area. Why? Oh, well, we thought we needed that. We need to correct it. So next one is the production. I'm looking to know about the margins and how productive you are into generating your revenue. If you look below here, this is like your normal profit and loss. It's revenue minus cost of goods sold, which equals your gross profit there, minus your general expenses that fall under, and then equals your net income, right? That's like the baseline of what your financials, what your profit and loss will look like. What I'm talking about, or what I'm indicating, is these two numbers right here. How productive are you to generate your revenue? I'm going to look at your gross margins. Then I'm going to compare it against your industry average. Once I compare it, it lets me know, are we overperforming or are we underperforming? And then I ask myself, what's the driver of why we're overperforming, or what's the driver of why we're underperforming? Well, maybe our vendors paying us too much. We can't get a deal. They're making us do consignments where we got to order it each time, and it's just not right. Whatever the situation may be, I need to know the why. Same with, and then also, of course, I'm looking to see how profitable we are. My profitability when it comes to our revenue and cost of goods sold. This lets me know, just, are we efficient? After I look at that, I'm looking at the revenue, and I'm treating it kind of similar to cash. Did it go up or down? Once I figure that out, I want to know the driver. Well, what caused it to go up or down? Did we lose a client? Did we gain a client? Did we go up in pricing? Is our pricing outdated where our expenses are just eating up our revenue more and more each month, and we're not putting the gauge to that? All these are driver questions that I need to know, or not need to know exactly before I hit on the call. But I need to have a clear understanding of what the driver may be. And once again, I'll let you know after I go through the five on what I'm looking at the drivers. It's a simple process on how I go about it. After that, I'm looking at net income, or what you can call the tax number. This is the number that's going on your tax form. This is the number that's going on your tax form. So I want to know where we're at with that. Through the net income or tax number is what I like to call it. It lets me know, when I'm looking at the driver, it'll automatically look at some of the expenses, because if it's going up or down, I need to look at the general expenses underneath there and see if it's going up, see what's driving it. And I look at the driver for that. I want to see some of my largest expenses in there and the variance compared to last month or same month last year. And then, of course, after I look at if it's going up or down, I look at tax due. Because if the business is doing good and their net income is growing each month, they're going to have some tax liability, either on a quarterly level and or the tax return. I need to be able to help break that down. So those are the two things that I'm usually looking at, or we should be speaking about for when we're presenting, right? Once again, we call this our financial statement presentation meeting. This is one of our cornerstone services. It's the basic level that all tiers of our clients get, right? No matter what tier you're on, it's going to start with the financial statement presentation meeting. Most accountants, CPAs, bookkeepers can't get this right. They just hand over the financials, sometimes not even right, because they don't go through the general ledger with them either sometimes. And it may be some wrong stuff in there. But this is our cornerstone service that we're looking. The main purpose of this meeting, or this meeting here, is to basically make sure we have the historicals right, and then the client knows about their company. Once we get that story right, every other meeting that we do after, easy. Next one is my favorite one. I like to look at recasted EBITDA, right? Earnings before interest, taxes, depreciation, and the amortization. This is, or you can just call it operating profits, right? Your EBITDA. So what the recasted part is, most people just give you that EBITDA, right? The earnings before interest, taxes, depreciation, and amortization, and that's it. Yeah, that's fine, but that's not the true value of your company. You got to do the recasted too, which is adding back the add backs and then subtracting the take backs. An example for add backs are situations where it's one-time expenses. Are there, maybe if you have a not overdue salary, a larger than usual salary that you just want to pay yourself just because you just wanted to. Maybe we'll add that back, the difference between your market rate and then your current one that's way above the market. We'll add that back. Or maybe it's like you spent one big legal deal that you were in, and that's not like a reoccurring thing in your business. We'll probably add that back for your recasted EBITDA. This shows you your true value of your company, and is very beneficial for when you're looking to sell your company. Or you can basically use this to help explain to bankers, like, hey, this is our true business. We just have some add backs, some things that that not recurring that we want to add back, right? So it's a good way to basically attract some loans, let the bankers know your true story, and also if you're selling your company, this can increase the value of your company with the recasted EBITDA. Granted, if you just present the EBITDA, that is fine too as well. We have some clients that don't want to sell or not even looking into selling, so we just the EBITDA in there too as well. And then the take backs are things that, like, say if you wanted to increase your EBITDA, so you stop paying yourself. Well, if you're selling your company, we got to be truthful. We got to let the buyers know that. So those will be things that we'll take back from the to show the true value of that too as well. So it's things like that, right? Or maybe you're hiring your child when you sell your company. That's not going to be expense anymore unless they're going with a new business owner. So we'll basically take that back too as well. Things of that nature. Yeah. Let's see. Yep. So that's that. And then from the drivers, this is like the why. How I want you to look at the drivers, you need to be looking at the general ledger. And then you also need to look at your profit and loss and or balance sheet. Okay, the last thing I was going to explain was the drivers, right? So you want to look at like the variances. Anytime you're comparing it, I like to look at, okay, what's like a 10% decrease or increase? And that gives me my investigation eyes to like, hey, I'm going to look there. Once I see like, okay, this is a 10% variance or more, maybe that's my range or my benchmark of where I want to look at. I start looking at the general ledger. That's going to tell me the story on why it increased or why it decreased. It lets me know what line items were spent on that and why did we receive more than usual, depending on if it went up or down. So I'm looking at the drivers to help me understand the why and to get my story right before I meet with the client. This is what your CPA should be looking at from when they're speaking with you. This helps identify, like, why did utilities go up? Or is there some utilities that we're paying extra for? Whatever the situation may be, right? But these are how I look into the drivers.